Hi, this is Michael Waits, and welcome back to InsurTech Amplified. This should be a good one. We are joined today by Veer Gidwaney, the founder and the CEO of Ansel Health. I hope I got all of that right. Thank you so much for coming to the show. Before we talk about the really important stuff about healthcare costs and stuff like that in the United States of America, let's give the listeners a little bit of your background as well.
Sure. Well, good to meet you, Michael. Thanks for having me on today's podcast. And yes, you did get all of that correct. I'm an entrepreneur and have been one since dropping out of school when I was 20. Not recommended to the kids at home, but have been on a great journey through that time, which we're excited to talk about today. I certainly am. I have a couple of kids. They're almost 15 and 13. We live in the New York area. My wife and I celebrated our 20th anniversary earlier this year. And family and this business are my focuses.
Feels like it, 15 and 13. I remember that, actually. Let's talk about healthcare. Are health costs in the USA, you must know this, right, more expensive than in other developed countries? And if they are, why do you think that's the case?
Yeah, it's a great question, Michael. I think certainly they are. I mean, I think it's well understood that the U.S. healthcare system is the most expensive in the world, and that expenditure of resources doesn't necessarily equate to sort of a greater quality or a greater accessibility of care necessarily. Yeah. And there are many, many reasons why costs are high, and I think we probably don't have enough time to explore all of that, except to say that it's worth pointing out that the U.S. healthcare system is really the only one in the developed world that is not a single payer system that is, fully government funded. Now, obviously, there are portions of the U.S. healthcare system, Medicare, Medicaid, veterans care that are government funded, but there's a very large private market. And so the idea of employer-sponsored health insurance is an anomaly. I mean, that is a very specific U.S. construct that doesn't really exist elsewhere. And I think, it's worth asking whether that's part of the, overall structural challenge that might be leading to the problems around costs.
Yeah, look, I remember when I was in school, we heard a lot about the military industrial complex, and I forget which one of the presidents, Truman, I can't remember who it was that warned about this, but I feel like in a way, remember, I haven't lived in the US in 30 something years now, right? So I look at it from a completely different viewpoint. I'm just wondering if there's like a healthcare industrial complex as well that maybe has as much influence. And that's first. But the second thing is, at the beginning, you said there are tons of different reasons why. Maybe just a few so that the people that are listening that don't know why can find out why, particularly me, because I don't know why it's that expensive. And I'll put you this way. The only two countries I've lived in permanently besides the United States are Japan and Thailand. And Thailand's a country where medical tourism was invented. So medical care here is so good and so inexpensive that people actually come here from all over the world to get care. So I'm just curious about some of those reasons why it's so expensive. And then we can talk about like the single payer stuff, because that's also really interesting to me.
Yeah, I mean, obviously prescription drugs are an element of that. The hospital system, physicians. I mean, there are many different elements of the healthcare system that in and of themselves don't make up a majority of the spend, but each of them individually are sort of a giant contributor to the overall challenge of costs. And I think it's a folly to assume that there's ill intent along the value chain. Maybe there is in certain places, but I think generally speaking, most people want to do a good job for a fair wage. But I think there's systemic challenges, right, that make that hard to do. And to your question around, is there an industrial complex around this? I mean, to some degree, there clearly is. But that is exactly why I think some of these challenges certainly can be addressed through innovation, through technology that introduce efficiency, no question. But there's also, I think, an important role for legislation to play to really drive structural changes that are hard to do if you're, just one cog in the wheel, so to speak.
Sure. So can you go back to this single payer thing? Because it was something that I wanted to cover later, but you brought it up right away. Again, just to give a really good definition of it, maybe talk a little bit about the Affordable Care Act, right? And who that covers and why it's so significant. And then why we have this system as well. I keep saying we, but like why the system exists in the United States where it's companies pay for health insurance, and then the gap that exists there? Because I think that's the gap within which Ansel's playing. Yeah.
Yeah, Michael, I grew up in Canada, which is a single payer system. I've lived in the U.S. now for almost most of my life, but the construct there is that the one payer is the government,
Yep.
obviously funded through taxes, and the idea there conceptually is that one payer has negotiating power to ensure that costs are in check. I mean, that's in essence sort of the key benefit of that kind of structure. We don't have that here in America, and I think perhaps we can talk about why that is. But I think more important is that it's probably not going to change anytime soon. It doesn't feel like
not now for sure.
The political will is there to do it.
Right.
So within that construct, then what are we left with? Right, we're left with tweaks to the system through legislation, but we're largely reliant on innovation, on organizations, companies, people coming up with new ways and new approaches to care to make it more affordable. The Affordable Care Act has been important to set certain standards around how the private insurance market should work, what should be covered, what's acceptable for a minimum viable health plan. It also expanded coverage to make sure that more people are under the umbrella of coverage. And that system has continued to evolve. There's been tweaks to improve it, but clearly we're not perfect, and there's a lot of room to go. And healthcare costs have been going up every year. I mean, the reports that I've been reading are probably another 5% or so in 2025, and for the most part, it's growing faster than overall inflation, and that's just clearly an unsustainable model over time.
Yeah. Yeah, and it's been that way probably for decades, right? So if inflation right now is like 2.4% or 2.3%, if it's going to go up 5%, that's more than double. That's a lot. And it's probably been like that for a long time. So if the private insurance market is creating gaps, right, and supplemental solutions or health solutions are necessary, can we talk about some of the innovations that you've come up with or that are just in the market that Ansel's addressing, to see like what that needs to look like or should look like to solve these problems? There's a protection gap for sure, right?
Yeah, there certainly is, and the legacy of this really is core to the health insurance plan. And as cost of care goes up, like we've been talking about so far, health insurance companies have to increase premiums. It's really the only way for them to absorb those cost increases. The challenge, though, is that those premiums are funded or paid for by two parties, employers and their employees. So most individuals are working within companies where they share the cost of those premiums in some sort of formula. So when those premiums go up, employers' pocketbooks are hit and employees' pocketbooks are hit. And the challenge is that that's sort of an unsustainable cost increase year after year. And so one of the ways that employers have been able to address that challenge is to have higher deductible health plans. So the thinking there is that if the deductible is higher, the out-of-pocket exposure for the employee is higher, then the premium can come down. And health insurance companies provide those sorts of health insurance plans, or typically known as high-deductible health plans. The challenge, though, with that is that as those deductibles go up, that exposure the employee faces becomes at a certain point beyond what their savings can account for. So if you look back, say, 30 years ago, deductibles on health plans might have been a few $100s. Today, the typical deductible for a family is $3,500.
But what is that in comparison to savings or income, right? Because that's the real number that matters. Yeah.
Yeah. So we've just gone through an election where kitchen table economics have been obviously central to the discussion. The unfortunate reality is that most people don't have enough liquid cash savings set aside to deal with a medical emergency. So if you have to go to the hospital because you have an appendicitis, you have a $3,500 deductible on your health plan, you're at least out $3,500. And those aren't the only costs. You might have to miss being at work. You might have to get extra childcare, et cetera, et cetera. Those costs add up. And the challenge that many people have is that they end up either going into medical debt. About 100 million people in America have medical debt. That's an
That's a ton of people.
extraordinarily, shockingly high number. Many
That's
people
insane. Sorry, go
are
ahead.
taking money out of their 401k early. So early withdrawals because of medical expenses is one of the top reasons why people...
Which means they're paying penalties as well. So they're losing a ton of money on that too, right?
Exactly. And in many cases, people are just delaying care if they can, right? Like, I can't afford to go get this taken care of, so I won't, which of course has other downstream implications. And in many ways, just from a pure economics perspective, could be more expensive later.
It's worse. Yeah.
Worse. Right. So all those things are happening. And so the question then becomes, well, how do you offset that financial burden? And the mission behind Ansel is to make sure that health distress doesn't result in a financial burden. So what our policy does is it pays out cash if any one of thousands of things happen to you, and you can use that money in any way that you need to offset those expenses and to help you get through this sort of difficult time.
Let's back up though for a second.
Sure.
Let's say I work for a big company like I used to, and I have health insurance for me and for my family. But my deductible is now going up. So you said it's around $3,500 an average. Let's say 5 years ago, it used to be $1,000 or $1,200. How do I know that Ansel, like, what is that supplementary coverage that I'm giving? And how much does that cost? And how do you cost that out so that it's reasonable enough for someone who has medical debt or doesn't want to get medical debt? You know what I mean? Who's not in a financial situation where they have to dip into their savings, dip into their 401k. It still makes financial sense for them to do what Ansel's doing. Sorry for the pronunciation.
Okay.
Do you know what I mean?
Yeah,
like, how do you balance all those things together?
Yeah. So, it's very rare that new insurance products get invented, especially around employee benefits. We invented a brand new insurance product. It did not exist. And there are a few things that we had to decide on early on to address some of the questions you've asked about. One is that if it's going to be useful enough, it has to cover a wide variety of conditions and illnesses. It can't be too slim in its coverage. So we cover 13,000 conditions and illnesses. That is, just for sake of discussion, that is a lot. And it basically means that for the vast majority of unforeseen medical events, so things that you couldn't predict or avoid, it's highly likely that Ansel will pay a benefit for that. Now, as a result of that very broad sort of span of coverage, if you have access to a good enough data set around medical claims, you can price a product like that fairly accurately, which we've been able to do. And as a result, price it in a way that is affordable for the employee. So typically our product, there's a lot of depends how many people are covered, what level of coverage you want. But for the most part, it's around, call it $25 a month. So for $25 a month, you're augmenting that health plan that you're probably paying several $100s a month for. So, to add maybe 10% to that cost, just for sake of discussion, you've got this added coverage that can benefit you in an unforeseen scenario. And what we've found is that almost half of our premium dollars are actually employer funded. So employers are funding the Ansel benefit, at least partially, in some cases fully, for their employees. And the reason they're doing that is because they are trying to offset the challenge they know their employees have because of the higher deductible health plan. So the employer is saying, look, I've got to put together a benefits package that you're going to be happy about, that's going to protect you, that's going to make sure that you can be successful at work. And so here's this overall plan. It comes with health insurance. It comes with this supplemental plan that in combination provides you with the kind of coverage that we as an employer want to offer to you.
And there's so many questions to follow up on there, but can I presume that the employers are paying that extra $25, which I think you said it was $100 that people are paying? So that 25 is actually 25%, I'm just 10%. I just want to make sure that I heard everything right.
What I was saying was that if you're as an employee paying, let's say $300-400 a month for your health insurance, you might be paying half of that of premium. So the employer might be paying this amount. We're coming in at roughly 10% of that.
Of that total cost. Can I ask you this? Did the employers pay it partially because they're doing some math around this idea of, if my employees aren't as healthy as they possibly can be, then their productivity isn't going to be as high as it can be, which means I'm willing to pay not necessarily just for the health coverage, but because the health coverage then leads to better employee productivity as well? I know there are a lot of moving pieces here, but is that the way they're looking at it partially?
Partially, but not mainly. the main reason is far more mundane, which is that the employer as well benefits if employees move to higher deductible plans because the overall premium comes down. And because employers are funding part of that premium, it's in their interest to get to get that premium down. One of the best ways to do it is to raise the deductible. So that, helps the employer as well. But the challenge, of course, is now employees are saying, well, the health plan that I had last year is now eroding in value and I'm paying more. So
Right.
this doesn't seem to add up for me. How are we going to square that challenge? And that's where the employer is saying, well, look, here's supplemental coverage that can be really helpful as well.
So you mentioned data and data analysis. If you have the right data, then you should be able to price it in a way that's effective and efficient, which means cheap enough for people to be able to afford it, but to then cover these 13,000 conditions. I'm sure some of those are pre-existing conditions as well. What happens though when Ansel invents these new products and existing health insurers look at it and say, why can't we do that? They must have access to the same health data. Or is it a case where you've invented this, it's like a value chain innovation, and then you can approach the incumbent insurers and say, you should use this as well and use them as a distribution mechanism for this product?
Yeah, that's a really insightful question, Michael. I mean, first of all, this problem is much bigger than what we alone as Ansel can solve. So
for sure,
we can't do it alone. So success for us partly would be we change the market, right? We introduce something that others want to replicate. There's, on the one hand, that's, I suppose, accepting that there'll be competition. But on the flip side, we set out to build this company because we want to solve this problem and solve it as fast as possible. So if we change the market as a result of our innovation, that's fantastic. Now, on top of that, though, we do actually, to your point, power other carriers to bring their own versions of Ansel to market. So part of our business model is actually to enable that to happen, because of our view that we might as well be part of making this market as opposed to trying to protect it just for ourselves. And in fact, there are incumbents who have been in this space for a long time. So the idea of supplemental insurance is not novel. Now, our product is novel, but the historical solutions are been around for a long time. You've seen ads on TV, I'm sure, for those sorts of companies, your listeners have. The challenge with those products is that when they were invented about 30 years ago, to our discussion earlier on, deductibles were not $4,000. Deductibles were $300. So they actually weren't invented to solve this problem. They were invented to solve a very different problem. And yet today, they're still being positioned to solve the problem that we're talking about. And they're not well designed to deal with it. And it's sort of a classic product market fit problem where the product has not evolved as the market has shifted. And the general challenge with those incumbent products is they actually don't cover a lot. So when I mentioned earlier on, we cover a lot. We cover, several X's, multiples more than what the incumbents do. And as a result, we just simply are used much more frequently. So what we're finding is that 20 of every 100 people that are on Ansel coverage are getting a claim paid in a given year. That's an extraordinarily high level of usage. And typically really only behind the medical plan and the dental plan, for a typical family.
You should probably mention this and tell me if I'm talking out of school here, but you said you've been an entrepreneur for a while. I love the fact that you dropped out of school, by the way. I love this. Your parents probably weren't super happy when you did it, but now they probably look back and say like, okay, you made it. But you've also built and sold other companies to other incumbent companies, right? So it's not like you're theorizing about what's possible to build and to create change and then to give that change to a bunch of other people. You've done this before. Is that fair to say?
Yes, but at the same time, times change. And
I guess my point is that you have a ton of credibility in saying, we want to make sure that we did this. We felt like if we separated ourselves out, that all the experience that we have could allow us to use all these new tools to create these new products. But again, not to protect it just for ourselves, but to make it available to other people, whether it's white labeling or just powering other people's ability to do the same thing. You've done that before. And I think it gives you a ton of credibility.
To some degree, that's right. But I think like I said, at the same time, this is complicated. Just as an example, right? And this goes to our very sort of starting topic around costs in the system. If you just think about the value chain of selling benefits, we might work with, we work with other carriers, like I said. So we have to get that carrier on board. Their salespeople have to understand how to sell this. They then have to talk to brokers. Brokers then try to convince employers. Employers then have to offer to employees. So that value chain is already, no matter how you cut it, complicated. So there are challenges, right? And there are entrenched interests along the way. The incumbent products are very profitable products. So, there's value created there. I would argue that it's not always value for the end user, which is what we should ultimately be focused on, which we are. But it's not easy to change.
Yeah, I completely understand. It's a very complicated problem, which is the types of stuff that I love to watch people solve. I'll tell you a really quick story if you don't mind.
Sure.
When I was working at Deutsche Securities in Tokyo, there were some incredible technologists that were there. And I remember asking one of these guys, this was probably around 2000 when kind of the dot-com boom was going on. And I remember saying to one of these guys, why don't you guys quit and just start your own company? And he said to me, we love solving big, complex problems. And big banks like this have big, complex problems to solve. And we love doing it because that's where the most impact is. Anyway, it just reminds me of that type of situation. Can we get a little technical if you don't mind?
Sure.
Not coding per se, but I just want to understand how you use kind of emerging or new technologies, whether it's predictive analytics, artificial intelligence, whatever it is, to then analyze all this data to allow you to make this supplementary care cheap enough for people to actually to be able to afford. Does that make sense? Like, how does the tech actually innovate around this to be able to do that?
Yeah. Well, I think it's important to point out that I don't think that technology innovation has been the core driver of the benefit that we've created. Now, technology is a big part of our organization. In order to compel other insurance companies to bring their own versions of Ansel to market, we need to give them a platform to run it on. And so that's a big part of the investments we've made as an organization. But the true innovation in our business has really been around the insurance product design. And I think that's important to realize, because what it points out is that other insurers whose core competency is to build insurance products should be able to innovate in the same way.
Right. That's the point I was trying to make.
That hasn't necessarily happened. So the innovation here, and this is not private information. Insurance products are in the public domain. So when we file our product with insurance regulators, it is available for everyone to see. And we've now had our product approved almost 250 times by state regulators. But the core innovation in the Ansel product is to tie those 13,000 conditions and illnesses to the diagnostic code. So every medical encounter, no matter where you are in the world, the US, in Singapore, in Indonesia, countries we've mentioned, they use an international standard called the ICD-10, International Classification of Diseases. And so if you have an appendicitis in a hospital in Texas or a hospital in England, that appendicitis is going to have the exact same code. So the 13,000 conditions and illnesses we cover are 13,000 ICD-10 codes or diagnostic codes. The beauty of that model is that on the first point is that in terms of the data set to price it, medical claims are part of the core data set to price health insurance. So if you can get access to medical claims, you can price our product very accurately. So that was one part of the innovation. The second is that it has to do with how we pay claims. So a frustrating part for any insurance product owner is that claims are hard to file and hard to get paid. We have eliminated that problem by making it absolutely unambiguous on whether an Ansel claim is payable. So if you go to the hospital and have a diagnostic code that is one of the 13,000 we cover, we pay a claim. There's no subjectivity to that. There's no analysis needed. It is a 0 or a 1. On top of that, when we are able to receive the medical claims data of a particular employer and their employees, and we do this in a way, of course, that's secure and people's privacy is protected. But when we can get that data proactively, we can then proactively pay claims. So the claims experience, Michael, for Ansel is, and I'll use the example. I hope this doesn't happen to you, but Michael, sorry you broke your ankle. We just sent $500 to your Venmo account.
Yep.
You didn't file a claim. You might have forgotten that you even had the Ansel product. We call you and we send you this money. And we have a net
Okay.
promoter score that for the last 18 months has been running north of 85.
That's
That
high.
is an exceptionally high net promoter score for your listeners
Yeah.
who are familiar with that measurement.
Yep.
And it's
NPS.
because that claims experience is extraordinary. And if you can imagine the situation people are in when we're sending them a benefit, is they've gone through some sort of health event. They're dealing with the trauma that comes with that. They're probably also having to sort out their finances. How am I going to pay for this? And we call them and send them this money. And almost always it's received with shock. And the phone calls that
Really?
we listen to are really heartwarming. And it's why we do what we do, because
For sure.
people are just blown away that this is happening to them. And for us, it's sort of we were a bit sort of self-conscious of that, because we don't want to be seen as heroes. We're actually just doing our job. You have a contract with us. We're fulfilling our obligation. We're of course pleased that you're happy to hear from us and to receive this money, but we're just doing what we're supposed to do. And so that whole value chain of pricing the product accurately, delivering this automated claims experience, is not because of technological innovation. Technology has made the process simple and streamlined, and we've been able to do it efficiently. But the core innovation in the insurance product is what has enabled this to take place.
Can I ask you this? Are you an MGA? Are you a full stack insurer? Like, who's doing the underwriting?
Yeah, so we have a fronting carrier that we work with,
Okay.
and when we write business on that fronting carrier, they're the primary risk bearer. We actually take on the majority of the risk through our own reinsurance entity. So in that sense, we operate like a full stack insurer. We take on risk and we manage everything else in that value chain.
Right.
On top of that, though, as I mentioned earlier on, we power other carriers. So in those instances, those carriers have their versions of the product and they are taking on the risk. The product is filed on their paper. We work, just to give you a list of those organizations, we work with Voya, we work with Symetra, we work with AIG, we work with Nationwide. We'll be going to market next year with Renaissance Life and Health. And we're open to partnering with others who see this as a product that they want to be able to bring to market.
What is it like when you go to them? This is always something super curious to me. Like when you go to them and say, we've created this brand new product, they're like, no one creates new products, right? Brand new products. And we've also created a technologically seamless experience where, like you said, even if people forget to file the claim, it's just done automatically. It must feel like magic to them as well, no?
For folks in the industry who are in the know, it certainly doesn't appear as magic, but I do think there's often the sense of, if there are 10 innovations we've thought of, it's normal that someone will say in the industry, hey, we've thought of like 7 of those, but we did number 2 and we did 5 separately a year later, and then we tried number 3. But the problem is that sometimes you need to do the whole thing. You don't get the value of the entire experience unless you build it up from scratch. And I know this is sort of an overused analogy, but I do think it really makes the point well here, is that Netflix is not Blockbuster on the internet. If you assumed that it was, you weren't going to make it. But if you realize that it was conceptually a very different thing, like Ansel is, then I think you sort of see the importance of being able to build from scratch. And so, not all incumbents view that favorably. Some do, the ones that we're working with. In fact, many of the ones I mentioned are investors here in Ansel as well. So not only do they see the benefit of their own businesses to bring this to market, but they see the benefit of the market overall having something like this, and they want to be a part of that as investors here. But like I said, there are entrenched interests. Like I said before, these are very profitable products for the incumbents. So if it ain't broke, don't fix it, right? In theory. But of course, our thesis has always been that's not seeing the forest from the trees. Most people don't have supplemental insurance. And if they did, we'd have a better functioning health system. And so really, this is a market growth opportunity. And for our, other carriers who view it similarly, how do we grow our business in this space by 10x, not 10%, then there's a different conversation to be had. And that's where I think, our partnerships are really interesting.
So that's another really interesting question for me, for you. I mean, the US obviously is a very large healthcare and healthcare insurance market, really large, but it's not infinite. And the rest of the world, I can talk about where I live and also in Japan, there is private health insurance everywhere, right? And I think some of that private health insurance provides a similar product, not a product, but a similar reason for being in the sense that it supplements the governmental, the single payer healthcare, right? Is there a way for Ansel Health to expand, not just in the United States, but expand globally to take advantage of this innovation that you have and expand to places like Japan, like Thailand, like Singapore, where supplemental health could also be necessary? And there are maybe some similar problems where the private health insurance doesn't cover those 13,000 things, which are standardized, as you said, through those, what did you call them? The ICD codes. Does that make sense?
Yeah, it absolutely does make sense. I mean, again, one of the reasons for the focus on the ICD-10 code were all the ones we talked about, but also the fact that it's international in its standard. Yeah. So to answer your question, yes. I mean, the problem in the US is far more acute. But to your point, in single payer systems, there are still limits to what the single payer will pay, one. Yeah. And two, there are expenses related to a health event that aren't necessarily healthcare expenses. As I mentioned earlier on, you might not be able to go to work. You've got childcare, any number of things. So yes, there's absolutely a role for a product like Ansel in those markets internationally. And in fact, if we came across an insurance carrier like the ones I mentioned focused in the US that might be in other markets that said, look, we'd love to bring Ansel to our domestic market, that's a discussion that we would be open to. I think that it's early days for us. We have a big challenge to solve here in America as it is. But as we think about the business over the longer term, absolutely, those markets make a lot of sense for us. And I think our business model and product construct are set up in such a way that kind of expansion can happen easily.
Yeah, I mean, I can't stop thinking about the possibility for that just in Southeast Asia alone. I'll leave China as its own kind of separate market because it's very domestic and just hard to break in for like even simple products, not even simple financial services products, but just simple products like toilet paper. It's just hard to break in. But in the rest of Asia, the possibilities kind of seem endless to me. And penetration, like you said, is just so much lower here than it is. And even in a single payer system, there are still gaps that need to get filled. And I see that every single day here. And the health insurance is a big deal. And it's also the entry point, I think, for most people to get insurance, not just in Southeast Asia, but in a place like India as well, where the insurance market is growing so rapidly, would make your head spin, actually.
Yeah, I mean, I'm not versed enough with those markets, Michael, to speak with any level of authority, except to say that the problem is there. The solution we've built is certainly applicable, and at some point in time, it could make sense. And if we get to that stage, then we'll have to get more versed in those markets. But part of the strategy of partnering with other carriers is that we're really relying on them to be intelligent about the market. So they have existing distribution channels. They understand the state regulators or the national regulators around insurance. So we really lean on that partner to drive the go-to-market strategy. So we don't have to be an expert to the same degree, but we can power them to be successful.
Yeah, I mean, one of the things I like to say is no one succeeds alone, and all you really need is the right introduction to the right partners, kind of in any market. And I think to a certain extent, the regulatory environments seem to be converging globally, right? I like to think about the US market. I always say has 50 separate regulatory environments just because the states are all different, but they're not that different at some level. Anyway, it just seems like a really interesting opportunity to me. Is there anything else that you want to bring up that I haven't mentioned that you think is important? Because otherwise I'll let you go. But this has been really interesting for me because, again, I look at the US healthcare system as an outsider, right? And sure, when I worked in New York and when I worked for Goldman Sachs, I had healthcare provided to me by a U.S. healthcare company. To be fair, I didn't really read through it that much. And I was so much younger that I didn't even need the coverage at all. Right. And now I provide healthcare to myself. So just the questions that I've asked you are things that have always been interesting to me. And you were really, really great at answering them. Is there anything else you want to mention at all?
Well, the last thing I'd say, Michael, is that this is a problem worth solving. And to your point, more problems worth solving always require a coalition of folks that want to address it. And often that coalition is made up of people who know the space really well, but sort of are excited about a new way forward that can, take the customer base, take those who face the problem into a space where they feel like we're addressing their challenges. And, our doors are open. We want to work with anyone who shares that vision. and hopeful to find additional allies out there to bring this to market. And I'm very appreciative of the time you've taken, Michael, and the questions you've asked. So thank you for having me today.
Thank you as well, Veer Gidwaney, the founder and CEO of Ansel Health. This was awesome. I really appreciate your time.